All right, welcome back. We got a Tesla earnings update. Yesterday, Tesla had their earnings. I listened to the call, and we'll get into the numbers and we'll look at the stock chart in a little bit. But we knew when we got their delivery numbers at the end of the month that they were not going to be so hot when it comes to earnings. So the revenue declined 9% year over year. 21 billion in revenue this last quarter. That's a $1 billion miss. So going into earnings, we kind of knew that we knew the numbers were going to be bad. The question was how bad? How much deterioration in cash flow and margin was there going to be? Because if they're selling less vehicles and they're selling vehicles for less dollar amount, right? They've been cutting prices on their vehicles. That's bad for revenue. That's a bad recipe right there. But to me, it was surprising that their gross margin was 17%. And their operating margin was 5%. So those held up better than a lot of people expected. So that tells us that they're becoming much more efficient, even more efficient when it comes to manufacturing and layoffs, whatever else they're doing to reduce their cost. Some commodity prices might be coming down. I don't see that, but I mean, lithium has dropped quite a bit. So maybe that's a big factor in their maintaining their margin. So I thought that was pretty interesting, and that's a good thing. Again, they're such a great manufacturing business, and that's only going to continue to get better. So that's going to help keep their margin at a high standard because they have the highest automotive margin out there. So if they can keep that edge, that's great. They don't want to see their automotive margin to get down to 5% around where the other companies are. They want to keep it nice and fat. So right here, we've got just an income statement here. Again, you can tell about 16.5 billion in vehicle revenue. You've got the regulatory credits, leasing, energy and storage was around 1.6 billion, and services were around 2.3 billion in revenue, and their cost of revenue was almost 18 billion for a net profit of 1.1 billion. So after all this revenue in, there's a little bit left over. Not a whole lot for the quarter. So the goal is to grow all of these inputs and reduce these outputs over here, these red ones. So, and when we look at their gross margin, again, their automotive margin here in the black bars, it's coming down quite a bit. But the flip side of that is they are selling a lot more vehicles, so it's probably not evening out. They're still making a lot more revenue. But what's nice to see is their energy margin is starting to increase, and also their energy deployment is increasing quite a bit faster than their automotive, their sales for cars. So we're starting to see a lot more when it comes to superchargers, the mega packs, the power walls, things like that. They didn't really talk too much about solar. I don't even think I saw their solar numbers, but I guarantee that's not good. But that is good to see that they're increasing margin in some areas while automotive is decreasing, and services is very small. Hopefully down the road that'll become a much larger part of their business. And again, that's where the full self-driving will really come in. That'll be under services. This is a bad graphic here. This is their free cash flow and operating cash flow, and you can see we've just fallen off a cliff. So that's what happens when you cut prices and your sales are down. The amount of money that's left over is a lot less. You still have to pay your employees, you still have to pay for your commodities and run the plants and all of that. And if you're getting less cash flow in, that is not good. So hopefully this trend doesn't continue, but this is a pretty doesn't look too good there. So real quick, I'm going to go over my pros and cons here. There was a lot that they talked about on the earnings call, but I'm just going to talk about the handful of things that come to my mind at first. The big one here is cutting costs to help with the margin, and then their manufacturing mastery, which is something we've talked about. They're so efficient at manufacturing, and Elon's been saying for a long time, it's not the product, it's the factory. The factory is the product. It's easy to make a prototype. It's hard to make millions of those vehicles with a decent margin. So they're continuing to improve there. Last week they did cut 10% of their workforce, so I think we will see even more cost cutting help in future quarters. and the question is, when will the sales stabilize? So they're down 9% year over year. We don't want to see next quarter down 9% again. We want to see maybe down 5% or flat, and then eventually rising again. The energy business is growing. That's great to see, and that's only going to continue to move on. You know my thesis on the electrification of the world. I'm hearing a lot more people saying in a few years we're going to be running out of electricity because we've got the demand for electricity is going to be skyrocketing, and Tesla's going to be a big beneficiary of that. So we will look to see some more of that down the road. And because there is such a shift in other automotive companies moving away from EVs because they just can't do it. No one wants their product. People are pulling back on EVs in general. That's why Tesla's numbers are hurting, but especially who wants a Nissan Leaf when I can get a Tesla Model 3 for around the same price? So their competitors are saying no one wants EVs, so we're going to go to hybrids. Hybrids are the best. So you're hearing this narrative that, EVs aren't the way to go, it's hybrids. I think in the short term that can be a stopgap for some people. But I think 10 years from now, everyone's going to be like, why did we do the hybrid thing? I mean, the hybrids have been around. How long have Priuses been around? They're just not that interesting. It's either wait for the EVs to get better, wait for the charging network to get better, or just stick to gas vehicles. Depends on your need. But if you have a garage and you don't drive over 300 miles a day, an EV, or if you have a garage and you don't drive over 300 miles a day, an EV makes a lot of sense. I'll be making a video here soon on my experience as a Tesla driver. I've had my car for just over a year, and that's why I have so much conviction in the stock. What's funny is I've owned the stock for 3 times as long as I've owned the car. Typically, it's the other way around. People buy the product and then they buy the stock. I had the stock way before I had the product. And I have so much conviction in the company after having it. I'm like, this makes just so much sense. My life is so much easier and I spend a lot less money. So anyways, let's move on. Elon and the team had a great call. The last year or so of earnings calls have been terrible. This was a really good call. Very organized, very professional. There was no crazy rants. It was really refreshing, and I'm glad that I'm sure they've talked about it because they were getting a lot of backlash. But Elon was positive. The team was positive. They were clear on what their message was. And I left the call with a lot of optimism in the future and what they're doing. They have a very clear plan on where they're going, whereas in the past it was a lot of explaining and excuses. This was, hey, demand was soft, but here's what we're doing. And so they're making a lot of changes to right the ship, whereas in the past they were kind of just kicking and screaming. So this was great. I really enjoyed that. So let's move on here. They talked about a lot of future products coming. I'm not going to get into all of those because you know how that is with Tesla. Is they talk about something and a lot later things will realize. But what you're going to hear a lot more about is the autonomous driving, autonomous taxis, all those things. They're kind of pulling away from the $25,000 car, but what's ironic is they don't really need to make a new $25,000 car. The Model 3, the prices are coming down so fast, pretty soon that's going to be the $25,000 car. I don't think they need to make another model. I think their cars are getting cheap enough, and they're getting close to about $30,000 for a base model, and I think that's close enough to $25,000. So they're really doubling, tripling down on autonomous driving, which makes so much sense. So you're going to see all the different services that come with that. They're going to start experimenting with that, and I will pull up a couple of photos here in a minute. I don't think I have it pulled up, dang it. So I will not pull up some photos. I don't want to make you guys wait. Let's just get into the cons. So the cons is the free cash flow, that graphic I showed you. It's not good. I mean, obviously, they have enough cash. Their balance sheet, it says 20 billion or whatever in cash, but the problem is they have debts also. So they're having to pay their debt. So they really only have a couple billion in actual free cash. and with their free cash flow dropping off a cliff, they got to be very careful. What's good is they don't have a need to issue shares and raise more money. So that's good. As a shareholder, you're not going to get diluted anytime soon. When I say anytime soon, a couple more quarters like this, they may have to start thinking about that. So we'll have to wait and see. Again, the bottom doesn't look like it's in. They're not giving guidance, and we need to see a couple of quarters of revenue and earnings stabilizing. So who knows how long that'll be. I kind of am just writing off this whole year, 2024. I don't expect a whole lot. I just don't want to see a complete deterioration, another 3 quarters of down 10% sales. So I'm hoping that we see a slowing of the decline, but I do expect to see a little bit more of a decline. Elon's pay package that the Delaware court ruled against is up in the air. The shareholders will hold a vote coming up soon. So the big problem here is if the shareholders decline, right? What's so funny is that the stock has fallen so far, so fast, that maybe there are some shareholders that are soured and will say, you know what? No, we're not going to pay Elon. I don't want to pay Elon $64 billion because look at the stock price. Yeah, it's gone from $3 to $500, but it's now back to $150. So the short-term pain in the stock price may sour some investors, and if a lot of investors vote no and decline his pay package, there could be a world where I see Elon leaving Tesla and taking maybe the Optimus robot with him. Something like that. So who knows? It's just there's a lot of questions when it comes to that. So we'll have to wait and see what that looks like. The battery tech, they said towards the end, is not as revolutionary as once stated. So they have these 4680 cells. And it reminds me of the DOJO computer where they hyped it up a lot. Hey, we're making these 4680 batteries in Nevada and Texas. And they kind of walked that back to where, hey, you know, we made those out of necessity, but we're just buying cheaper batteries from China just because there's not a necessity anymore because everyone's dropped out of the EV race. It's easier and cheaper for us to just buy these batteries. So that was interesting. They're still using those batteries in the Cybertruck, but they don't seem to want to push those into the Model Ys and other vehicles. So it was weird to hear them kind of be like, oh yeah, that's the redheaded stepchild, because they were talking it up all last year. And now they're kind of like, yeah, that's no big deal. We're gonna move. You know, it doesn't make sense for us to focus on that anymore. I'm like, well, I guess so. You were supposed to be a battery exporter to, you know, Toyota and whoever else that was going to make EVs, but now that they're pivoting away, they're kind of like, yeah, no big deal on that. So it just reminds me of DOJO where they hyped up, hey, we've got the supercomputer, and then all of a sudden it's like, yeah, we just bought all these NVIDIA chips. And it's like, well, I thought you were going to do that in-house. So anyways, that was another con I did not like on the call. And other than that, besides the numbers being dog crap, I thought the call was great. I thought their earnings were fine. Fine compared to what they could have been. So they kind of stabilized things. But again, the numbers were horrible. They were horrible numbers, and I hope we don't see more of that. But again, the estimate was 22. They brought in 21. Okay, 4% miss. Not the end of the world, right, for how poor their deliveries were. Again, the big question to me is how much longer of this decline are we going to have? The stock is up 12% today. Again, because it's better than expected. The expectations were death, and we didn't get death. So we didn't die. Good. And what's ironic is we're still in this nice steady downtrend. We're just kind of bouncing from the bottom back to the top of the downtrend. So I really think this is less of people saying, I need to go get and buy Tesla, and more of, okay, it's time to close our shorts out. The numbers weren't as bad as we thought. But we have 3 red quarters in a row. Not good. And that's why the stock is in a downtrend. The earnings are in a downtrend. So we have to wait for the earnings to stabilize, for the stock to stabilize. For me, I did pick up some shares yesterday. I'm all in my retirement account. So that's me. I don't suggest anyone else do that. But other than that, there's not a whole lot to talk about on the price. It wouldn't surprise me if we pull right back down to the 130s or wherever our low is. But earnings better than expected. We just have to wait and see where the bottom is. I don't think we found it when it comes to earnings, and most likely we probably haven't found that in the stock price as well. So that's all I got for you guys. I will be tuning into Meta earnings in about 6 minutes, and probably won't make a video on that unless there's some material information in there. But I'm staying tuned for Google, Microsoft later this week, and I think Amazon is next week. I'll definitely be making a video on that, so stay tuned. Until then, have a good day. Peace out. Go Pacers.